Welcome to the Kendall Report, your gateway to the dynamic world of finance, where economies thrive and market dynamics unfold. Get ready for comprehensive and impactful financial analysis with the Kendall Report. We merge macro analysis with micro outlooks, empowering you to navigate the intricacies of finance with confidence. From equity indexes to interest rates, from crude oil to the US dollar and gold, we cover it all. Join your host, Bob Kendall, as we delve deep into financial complexities, providing you with in-depth analysis to stay ahead in the financial game. The Kendall Report, where knowledge meets strategy. Together with Bob Kendall, we navigate.
Okay, everyone. I'm at a new location. I'm trying to do a live stream, and I've already see there's things jacked up here. So it's going to be a rough start. I want to get this studio up and running, and so anyway, let's go to some charts. There's already 38 folks in. Anyway, Hulk Hogan, huh? Okay. All right, folks, let me see if yeah, this is interesting. Let's go to, I'm just trying to get this working. I've been having issues. Not only have I switched over to a new studio, I actually went from PC to Mac. So I'm about 3 weeks into this transition. So let's talk a little bit here. I'm going to try to bear with me while I'm getting things set up and the room's starting to fill up. The volume is a little low. Okay. Is that better? Let me know if that's better. Yeah. Yeah, folks. Yeah, what a day. Let me know what this volume sounds like. This is the first time I've cranked up this on the Mac, and I'm already seeing an issue here. Yeah, one of the things that I talked about, let me know, are you guys hearing me? Okay, sound is okay. I'm just looking at settings. Folks, this is the first time I went live, and transitioning from Mac to from Windows has been quite challenging. Am I selling my old computers? No, not yet. There's a lot going on with me, so I'm trying to. Some of you know, I have my wife's very sick, so I'm moved over to the home office so I can be close by her. So that is part of the transition, and it's just been a lot going on. So it's one of those things. I'm going to try to go to another screen and see if I can fix this real quick. Hang on. Yeah, it's interesting. I'm clicking on things and nothing's changing. Okay. All right. Yeah, there's like a lag in things changing. So anyway, so the sound's okay, everything's good. Let's try to get into some flow here. And we've got about 87 folks in. So this was impromptu. I'll hang around for a while. Hopefully, if we can get this going, we'll go through some stocks and just this will be totally casual, just laid back. And I'll get some things hopefully going next week, a little more formal. A couple of things I've really dedicated because it's given me a lot of room to work is the Substack account. I know some folks have complained I raised my rates, but you can still, if you sign up for an annual and get it for 12, I think it's $12.25 per month now. It was $8. So it's up a little bit. There was a special deal that got it down to 6, but that's over. I'm trying to make a couple things and changing of what we're doing here. I'll try to set up a number of things here. And yeah, so somebody, AK, here comes the plunge projection team. So we'll go over to another chart here, but I want you to notice we went to the 21 period moving average in Substack last night. I mentioned that's where we're probably going to go, and if I mention these numbers, we go there. I was a little upset I didn't talk about some of the other elements that on the on interest rates, because there's 3 Fibonacci targets down. So maybe I can put all this stuff together, folks. So bear with me while I get into the flow of things, setting an all new environment, all kinds of things going on here. Thanks for the super chat, TBH. Yeah, so let me change the screen a little bit. Let's start with weekly. We'll get into what are we don't have a long time to go here to the end of the session. Where we at? We got about 15 minutes. So we'll come into the 10-minute manipulated time. But real quick, just to set this up, we are seeing the algos are very weak. If you recall, we got that outside bar. This will be the 3rd week, but we got that outside bar. We got the confirmation. This is a follow through. We should have potentially one more week down. But what we may get next week is a spike down, then a reversal, and then maybe set up some kind of pattern from there. I don't think we're going into full out collapse, but we're looking at the algos here. You look at the PPMs, they're showing weakness really all the way through August. And I've been kind of going on the Substack that one of the things that I talked about going back to April, actually March, April, was that the database was suggesting we would at least stay bullish until July. And then as things evolved, the database has been pretty volatile. And what I ended up doing is kind of extending that out to August and beyond. And we're there, right? And now we're seeing this big rollover and what I'll be looking at over the weekend and as I go through some stuff is trying to figure out whether this is the big event that everybody's been waiting for. You know, I'm not sure that's the case. And like I said, if we go back here, and then we'll go over to the short-term charts. Hey, listen, I'll hang out with you folks if you want to hang out. So it'll be kind of an aftermath thing, but my hope is that we can probably spend at least an hour or so, and then what we'll go through some individual stocks. We'll look at a bunch of stuff. There's a lot of carnage out there for sure. But if you notice we went right to the 21 period moving average. Let's convert this over and let's come over and let's go to a 5-minute graph here real quick. 5 minutes not really showing us a lot here from the standpoint of, like, is there a big rebound? There's some Fibonacci targets pushing us up towards the 200 period on the 5 minute, which let's see what those Fib targets are. They are 53.81, 53.92, and 99. That's up here, but looks like there's some constraints. The algos are not telling us. The PPMs are really kind of trying to flatten out here. So I don't think there's going to be, doesn't look at the moment there's going to be anything that's going to be a big flashback. And, but we'll see. I'm going to put up a chart, one of my favorite charts actually, the 5-second chart. Let's watch this thing trade for a few minutes. Just see how what the algos are picking up. So this is a 5-second chart. It's actually showing us a range projection. Yeah, look, it's getting weaker. They're selling this thing right into here. And by the way, I always tell you folks, a lot of you have the indicators. And by the way, I know we advertised we're going to end the sale on August 1st. By the way, folks, I got a big announcement. Today is my 72nd birthday today. So I'm working on my birthday. So that's okay. I'm good. So yeah, 72 years. Unbelievable. This would be 45 years hanging around these markets. Started on the Chicago Board of Trade so long ago. The Chicago Board of Trade doesn't exist anymore. So anyway, not in physical terms anyway. So very interesting. All right, so we'll watch this chart for a few minutes. We'll kind of chat about what's going on. So I think this is a bit of an overreaction too. I know we missed on the employment numbers a bit, but they weren't that bad. And we did see claims come up yesterday. We're seeing some things. One of the charts I put in the Substack yesterday was the unemployment chart, and I'll show you that as well. We'll kind of watch the markets. Yeah. Yeah, don't look a day over 100. Thanks, Jack. I appreciate it. Anyway, yeah, no, thank you, folks. Yeah, sometimes you gotta cheer on for yourself. It's pretty amazing. My dad died when he was 62 years old, so I'm 10 years beyond him. Most of my uncles and everybody lived well into their 90s, and I always I don't know if he's around or listening, but one of my idols is Dr. Jim Baker. He's 83 now, and I always tell him when I grow up, I want to be just like him. So very lucid, amazing to I've got a couple other people I know that are in their 80s. I call them super thinkers. Their minds just don't stop. It's pretty amazing. I hope that's me. I hope I'm around for a while. Yeah, let's see. So let's kind of just hang and talk. We've got about 7 minutes to go. Let's just hang out, watch the market trade here, and just see what's going on. We've rebounded just a little bit. This is a 5-second chart up on the screen right now. Let me adjust this thing out. Yeah, thanks, Snooker. That's funny. How many market years is that? Yeah, 40. This is coming on 45 this year in September, I think is the, yeah, it'll be 24. I started 79. So yeah, it's been a long trek, folks. Yeah, like I said, we'll do some interesting things. Just kind of hanging on, watching. I don't expect much of a rebound here. Let's go over the hourly chart. I have to tell you, I always talk about the indicators. If you don't have them, it's kendallreport.com/indicators. The pricing's still the same right at the moment. We'll call it the birthday sale now. But one of the things that I want you to see, we had a couple events that on the hourly chart that I think are worthy of looking at, and we did get. So there's it's funny, we were playing around with some AI, and I put that silly country and western song on the inverted V. We had an actual V this on this bar right here. I do not have a drawing tool for this computer yet, so I can't mock up the chart like I normally do. So bear with me. This was kind of impromptu. I was talking to an associate, and it took me a half hour to get everything configured. And it looks like it's working pretty good. I'm on a green screen until I get things going, and the green screen's not even adjusted very well. So we'll we'll keep going from there. But anyway, so here we are in the hourly charts right up against resistance. It does show that we're going to rebound. I think that the chart that when we get through the close here in just a couple minutes, I'm going to go back and let's talk about the weekly chart, the monthly chart, before everybody gets all carried away and the end of the world is coming, although it looks like it if you watch the Olympics, right? But the bottom line is I think there's support, and I think very quickly these markets move very quickly. And one of the things we have, in my opinion, we have an entire different investor mentality that's out there, and that is, and I'm not, it's not good, or it's just, I just want to state it, is that the millennials are the largest demographic in this country now. Old dudes like me are not where it's at, and I was talking to one of associates probably when I was mid-30s, when I realized that the reins are being turned over to us. And I was at a very large firm. I had just got my first big research job at the time as an analyst, and then I ran a large division for this firm. And all of a sudden I looked around, and the CEO was 42 years old. The COO was 40. I was 36, and we had a whole bunch of folks that are around. If you guys ever seen the Hightower report, Dave Hightower was basically ran the research department when I was at a company called Stotler and Company. My point is this, is that the reins are being turned over. The millennials are now taking over. There's a lot of very different mentality. When I was growing up, what we saw was everybody was against charts. If you were a chartist, you were like, you weren't anything. So that's changed. So I'll finish the story in a minute. Where are we at here? We've got about 3 minutes to go. Let's watch the last 3 minutes. Let's go back to my 5-second chart and take a look at, see how this is going. So we did move up here. We'll just watch this, and I'll go back to the story. I think it's interesting because it has to do with market flows, and I've noticed something very different. Yeah, 72 trips around the sun. That's quite a few. So I want to watch this last. This is my favorite time. Those of you knowing me for a while, the last 2 minutes is a really important thing, because I spent a lot of years on the trading floors, and you see everybody squaring up books, especially on a Friday, especially after big news. We got all kinds of carnage around. It'll be interesting to see how these last couple minutes go. Yeah, Intel. Hey, listen, the traditional chip guys are getting hammered, right? So we'll go through a bunch of scenarios. Like I said, we'll probably hang out. If you folks want to hang out, it's late Friday afternoon. We'll hang out for a little bit and talk about some things. But it looks like we're starting to stabilize here. We're in the final minute. So we're trading 78. So pretty quiet close, actually. This is, I don't know, I wouldn't call it impressive because of where we are, but it's definitely fairly stable here with the last minute. We're not getting a lot of things to move around. Here we go, getting a little bit of selling coming in here. I said this 5-second chart, so we can really pick up on a movement. The algos are just flat here. They've completely flattened out. So we'll talk about a number of things here. Yeah, the red dots are predicting the movement. That is correct. And I can actually, Listen, I'll hang out with you guys for a while. We can do anything we want. We'll just watch this close. And so that's really the bell right here. So we're going out here 73, 74 range. So pretty stable close. So a lot of times you'll see a lot of squaring up. I think that's what we watched from around about 8 minutes. That was that little rally, so a little short covering rally coming into there. And so let's go out and look at some of this other stuff here and take a look at I'm gonna focus in on this weekly chart. And I'm going to do my best to see if I can slide something from the other screen over. There was a graphic that I put into the let me bring this over for a minute here. See if I can get this to work. Bear with me. What? Yeah, so let's take a look. There's a couple things. Yeah, gold actually got hit. That was interesting with rates down. I'm just trying to find this one chart that I was looking at. Here it is. This is what I wanted to show you. So this is the chart. This is the S&P, and this green area, I was trying to do the best I could with this graphics, but this green area, value buy range. And let me explain that. I put a few words on the Substack last night about this, but this is going to be this is a 40-week, this is a weekly chart. The 40-week average is going to be the place where we're going to see most of the support come in. So we're probably, the algos are actually showing a little rebound. We'll go to the actual updated chart here. This is from last night. I was up at 3 in the morning. I am like when I'm in this kind of environment, I'm part vampire. So, but this range here is going to be where the value range starts to come in. So watch along the 40 period moving average. My expectation, let's go back to see if I can get us back to the actual live chart here. And what this is showing us is that we do have PPM1 is really flat right now. We're looking at 0.09. PPM2, which is where the value is, where the angle of attack is being calculated at the 21 period moving average, is still at a 0.21. So it's still in trend mode. There's basically telling us there's about a 60% probability that we hold these values here. We'll take a look at exactly what those are, but that right now is, let me just look at these values, 53.45. The low was 53.31. We go out at 53.74, so we bounced a little bit, but you can see the algo. Let me just bring this up so you can see the red dots here are projecting a little bounce. And I wish I had a drawing tool. I'll get that figured out. But this, where the 10 period moving average in the 21, you can see that the algos are actually telling us that we're going to go into that range. And typically what happens is you'll trade within that range, and then as we that 21 is going to have enough of an angle of attack that should hold prices. But here's my expectation is I think we spike below the 21, maybe early in the week, Monday, Tuesday, and then you get a reversal and you trade back into the range. Probably next week, you probably get your first higher. You make a lower low, but you get your first higher close in the last 3 weeks. So we get, there's a lot of bar patterns, and I need to actually put this in. And one of the things that we're looking at, we're putting together what I'm calling like a tutorial. Is going to be email tutorial. Probably actually put it out on Substack. There'll be another area on Substack that you'll be able to go and get this stuff. But there's a bunch of patterns, bar patterns that I have identified over decades. There's 3-2-3s, 5-3-5s. There's a 5-3-8. There's a whole bunch of patterns, and I always joke if I were in Vegas, I would be banned from trading because I'm a bar counter. I'd be a card counter in Vegas, and there's just so we have 3 weeks down. Typically, we probably get a couple weeks up. They don't have to be up big or in kind of big reversal, but consolidation sideways would represent that, and then we probably have another three weeks down. So if we extrapolate that out, what I just talked about is a little bit of rebound here in the mid August after a spike low, and then maybe a rotation back down coming into the end of August and into early September. We'd see another 3 weeks down. So all of a sudden, well, from the reversal high, which happened at an all-time high, which is called a key reversal, and once you get that type of action, that's what's likely to happen. So let's. I know I said I'd finish this story after the market close, so I'm all over the place, little ADHD here, but I want to finish that story on basically what I'm calling a new class of yeah, I could see the chat. Let me see if I can fix something here. I can't see the chat. Okay, there we go. Yeah, so let's talk a little bit about that. Then we'll come back to, we'll go on to the NASDAQ. And one of the things I do want to talk about is the Russell. Yeah, let me know if the screen just blacked out here. Let me know if you guys had a loss as well. I'm trying to check out the bandwidth and other things here at this location. But let's just unpack this, what I'm calling a new class of traders. Now, the new class of traders, this is going to sound somewhat offensive. Not that they're actually very smart, but they think they can look at a chart and have the context of what's going on. And it's always important to have some understanding of what happened. I made a comment to somebody on YouTube. It was a fairly long post that I made, and said something about if you just go look at the inverted curve, everybody knows that the sell-off doesn't start until the curve steepens, and he goes, just look at a chart. So millennials think you look at charts, which is the opposite. When I grew up, if you looked at charts, people are going, dude, you need to have your fundamental background. So I was kind of forced to pay attention to the context of when things were happening versus just a price movement. And price movement, there's purists, and I've been in and out of the purists from a technical standpoint. But here's the other thing, because the millennials, and this is a worldwide group, not just here in the U.S., but is really the probably one of the most powerful trading groups there's ever been. And just because of the pure size and also of the restructuring of how the markets work, meaning that you have fractional shares and you have no transaction costs. The cost of trading is minimal right now. And that all of that equates into liquidity and lots of traders, which is a good thing. There's lots of liquidity. That's why when we see days like today, and even on, we'll say on Wednesday, the markets will run and they just keep running. There's waves after waves of buying. So the sentiment gets into play. And I had a guy, a buddy of mine. He was president of what used to be a New York Futures Exchange. Horowitz used to always say, "Hey, the trend's your friend. Never too high to buy and never too low to sell." So that's how the mentality of a lot of folks are. They're willing to pay anything, especially if it's a meme stock like Tesla or something like that. And they'll pay up anything for some of these things. They don't care what the price is, and that drives prices further. And so back to this. So, but this group of traders has a lot of power, and there's a lot of influence in the markets. And I've noticed this stampede. I've been talking about it for several years now, probably going back towards the pandemic. That's when the nature of the markets, I've been around for 45 years almost now, and the nature of the markets and how they trade are similar but different. And I have to steal those words from Paul the other day. He said, "History doesn't repeat itself, it rhymes." And what we're seeing now is a lot of action that we see in the markets are exaggerated because of this stampede mentality. And think about it. When I was talking to one of the guys that I used to work with back in Chicago back in the day, and I was saying, imagine if we would have had Twitter and what we're doing right now, being able to talk to thousands of people and simultaneously and influence and all the stuff that's out there. There's millions of YouTube videos every day, and so it's pretty amazing. A lot of influencers, a lot of emotional stuff. I saw somebody post on Twitter, go, "Bob Kendall's boring. He just tells you about the macro and talks about stocks and all that." But it says, and Treetop, you're right. Millennials will have no choice but to learn fundamentals. The markets, and because they're punished. Here's a classic example. And let me change the chart over here. Let's go to, we got to put the Russell up, right? If you read my... If you were reading any, let me go to the cash here. I'll get better calculations here. But if you read my Substack for the last couple of weeks, everybody's, the big rotation's here. And I'm like, hey, folks, slow down a little bit. Because when you look at the stocks in the Russell, they're not good. So I also have to put up, if you hear a dog barking, so bear with me. But if on the Russell, these stocks, there's a lot of the financial stocks. There's a lot of there's a lot of zombie companies here. And I'll even show you that I built that IWM hack on our software. And, there's like 12 stocks that are driving a lot of this performance that we've been seeing, but not just... actually, for the last 2 or 3 years, they've been dominant. And this is why I always tell, be careful about indexing. That's the other thing. Millennials, I joked when mutual funds were an effort to make investing simple, and then ETFs were the next level. And so when you start trading baskets of stocks, and especially when you get concentration, everybody jumping into IWM and similar ETFs, boosting some of these stocks, they all got punished. I made a comment, I think it was 2 nights ago in Substack, that, they've got everybody in. It's time for a flush. And boy, did we get it. 7% in 2 days? The Russell was up 14. Now it's probably up 6 or 7. I'm not sure what the exact number is, but that trade was doomed to fail. And now we're back exactly where we were before. You look at this chart on the screen here. If we go back over here, we were at 20. The range was 2080. Now we're back at 2080. So the trade is completely been erased. And when you see a chart like this, when you see these big, this outside reversal bar, this thing is pretty insane. The algos are suggesting it would go sideways into a range here. I don't think it just full out collapses, just like with the S&P and the NASDAQ. We'll take a look at that here in a minute. None of these things are just going to collapse. We're actually traded right down to the support levels. And I always know when you start to see, it irritates me, folks, when people go, oh, the NASDAQ is now in correction phase. What they mean to say is the NASDAQ has now corrected. They make it as if now we just got somewhere and now it's going to keep going. No, it has corrected. So we're already in that corrective phase. And I in a Substack, I remember it was a couple of days ago, I'd have to look through some of the issues. I was talking about these levels of where the markets were likely to go on this potential turnaround. And so this is level 1. We should get a bounce. We'll go through NASDAQ here in a minute. But this group, this asset class is a long ways from being okay. And I know Druckenmiller and what's his name? The other guy that's always bullish. I'm trying to think of his name. Tom something. He is actually, talking about doubling, tripling. Now, if you go back and read on Substack, I think I've made it available. If you even get just a free subscription, there is going to be some things I'm putting out that I'm going to be putting out. Substack is going to, Substack or something like it. We're working on a project behind the scenes that I think will be very, very important as far as my work goes. But the Substack is going to be a place where I'm going to be delivering. Yeah, Tom Lee, thanks. I've never, I guess maybe he's been bearish. He's actually a really smart guy. A lot of people are smart, and I figured out in the trading pit a long time ago, smart doesn't make you good, and it doesn't make money. If smart made money, all the smart people would be really, really wealthy, So from the standpoint of, all the super educated, we used to take the guys that come in from the MIT, the math guys would come down and trading floor, and we'd take all their money in 6 months. But back to the Russell is what we're really looking at here is it just collapsed back into the range. Let's go a little further out. Let's go to a monthly chart while we're thinking about it. I mean, this thing's a mess, okay, and it should be. Even the monthly is kind of flat to down towards this maybe 2050, 2070. Again, we're pretty much coming into that range right now. Where we're at 2080. We're probably coming. Let me get this down into this range here. Mid range is going to be, 2000 again. It should bounce back a little bit. Like I said, I don't think it's a straight down collapse. But you start looking at this long term chart. I had some trolls on Twitter going, it's going to all time new highs. Let's see what they're saying today. There's just a lot of bad stocks in this index. I'm sorry to say it. It just is what it is. So we poked out of the range for a little bit, and we're right back at the top end of the range where we've been for two plus years. So I have a hard time. Hey, it was a good trade if you got it and if you got out, right? That's the case. So let's do this. See if I can. Yeah, I'll pop this up on the screen. Let me get off of this thing here. I'm not sure. Yeah, this green screen on white is not good. Thanks for the happy birthday wishes, everybody. Yeah, listen, I'm not saying ETFs aren't useful. I can't get any screen to change here right now, folks. I don't know what's going on with this thing. I want to get out of the way, and I can't get, it's like frozen. My experience so far with Macintosh has been mixed. I got a Mac Mini with a Pro 2 M2 chip, and it's fast. It does a lot of things good, but every program I use is like, doesn't work very well. I literally cannot change screens. I don't want to be on this screen. Like everything is frozen here. Okay. Let me see if, yeah, so let's just talk about it. I'm sorry I'm in the way here and I look like a ghost. But this is the IWM. I went through, got 12 stocks out of here. This thing's been pretty phenomenal. It's went basically from 100K to 300K. But the last, from 21, even in 22, 23, this thing has made 24, 16, 50.41, and 44.89. It's pretty amazing here. Let's see if I can change screens here. There's somebody, hopefully they'll, okay, that's working. I just can't get my Streamlabs is like frozen. This whole monitor over here is nothing's happening here. This is very frustrating. Yeah. Yeah, nothing will. Nothing will change. Sorry, folks. New environment. This is not a feature. I don't even know. I couldn't even stop the stream right now. So we'll be on for hours. Anyway, let's just talk with the. It's interesting. The stocks that came out of this is when I did the research for this hack, and I'm going to show you folks how to do it. And I'm going to tell you something else that for coming into a period like this, I know a lot of folks look at, there's two sides of portfolio management. One is managing the risk. And I've been talking for weeks that I'm expecting to see I'll go over to the research page to see if that works. Yeah, that works. This is really strange. So I'm on two monitors, and the other monitor, when I click over there, nothing happens. It's just like frozen. Yeah, nothing on this monitor works right now. I can't even go to the Apple. So anyway, let's talk about the database. It's at 66. Let me see, did it? Yeah, there's probably some key I accidentally hit that's frozen this screen. I have no idea. Okay. I knew it would be a trial, so we'll have to just work. I'm sorry, I'm going to have to be on the screen looking like a ghost. So anyway, the database is at 66.98. I've been talking about in Substack for weeks that I think that we'll start to see some selling coming into the database. This is actually a pretty robust number. Anything over 62 to 72 on the intermediate database is good. There's 10,063 symbols that have trending long positions. I would suspect, I'm still saying this, in Substack, I keep every week, I'm telling you that this is going to happen, and I know it's going to happen. It's just been more solid than I've seen in the past. But if we look at, there's only 6 sectors that have stayed long. Everything else has been kind of rotating out from there. Let me try to do something here. This might make it a little more easy to see. Not really. Yeah, I'm just yeah, I'm looking at a couple of things. Yeah, I don't know how. Yeah, nothing on the screen lights up, so I'm not sure. Let me try. Yeah, I can't even move the screen. This is really. I've had moments like this on Macintosh. I get the security, I get everything, and I could tell you a video that I rendered was super fast. What used to take me 15 minutes was done in under 2 minutes, so that part's good. But this is not good. So let's move on. But anyway, yeah, so the database, I still think we're going to get back under. I'm looking for 58%, whether it happens today. There was a lot of carnage out there, and it would be actually a healthy scenario to see that happen. And the database, typically, if there's a big rollover, let's say, I can't really go to 2020 because in 2020, the database was already selling in January, which was interesting. We had a lot of liquidation going on. This has been pretty rock solid for the most part. And yeah, we'll go. Yeah, we're going to do that. I'm just going to go through this, just a couple things on a database, and I'll go through a couple more things. Yeah. Since I can't get off, we're at 1:30 right now, so we're about an hour in. But we'll go through some things. But the database is the thing that has kept me in the markets when I should be and out when I should be, okay? And one of the things that I would tell you, I think this software is pretty clunky because it's 20 years old. But don't be fooled by its appearance. It's got a lot of power in it. And one of the things that we launched this and gave access to retail investors back in 2020, we had a pretty good effort of engagement with you folks that were using it. And we haven't done a very good job. And I'm working on trying to get that turned around. But I can tell you, the sell discipline. I had an old client of mine. He goes, I don't care if you don't do the buy signals, but never ignore the sell signals. And that is if we do start to see a rollover, this is probably one of the most important times to have the software on your desktop so that you can see where these trends are breaking, especially on the intermediate. Short term has been very volatile. I talked about that in Substack. Very volatile all over the place. I think we had 2,000 buys and we had 2,000 sells the next day. With I think Wednesday we had a bunch of buys and then we had the next day we got a bunch of sells. So we had a ton of sell orders coming in. I think 2,000 for this morning's open. So the volatility there. The short-term models are really for kind of short-term sentiment for the most part, but the intermediate models will pick up the trends. And this is, if we start to see a lot of trends fail, this thing drops below 42%, something like that, that's not going to be good. That means we're going to see a much larger correction. And this could change the complexity depending on what goes on in the next few weeks. Think about what we got going on. This election actually is scary because it's almost like, the outcome could just cause a lot of ripples, and I'm just going to leave it at that for right now. But I think volatility in the markets is going to be big. If you remember 2020, it looked like the market was going to tank. Biden wins, and the market goes vertical. Everybody got on the other side. We saw a similar thing with in 2016. I remember when there was a huge drop in the market when the election results, overnight trading, when that came out, and all of a sudden a complete reversal by the end of the day. So it's somewhat interesting, to say the least. So let's do a couple things. I'm going to Alt Tab. All right. Nice. I'm getting windows to pop up. Let's see if this works. No, this other monitor is just frozen. All right, we're going to have to keep going like we are. Let's go back to TradingView, and at least I don't look like a ghost anymore. What was it somebody asked for to cover? Yeah, so Stanley has 3 million IWM, which is a rounding error for him. If that's true, and that's okay. It's not like I said, if you look at it, this is small cap on the screen right now. You look at it, there's plenty of support around here. Maybe this thing plays out. I just don't think that's the case. I'm trying to get back to really bizarre. I'm just trying to get this software to work because I want to go to a different screen, but it's not allowing me. Yeah, nothing even highlights on the screen. So any of you Apple guys, so you have dual monitors, one of the monitors, when you go to a mouse over, it doesn't work. What do you do? So let's see here. Oh, really? Unplug and resize the monitor, then plug it in for a second. Well, that's where the live stream is on. I guess if there's no monitor, it won't affect that. I'm just reading your comments here. Thanks. Yeah, exactly. He's actually probably I don't even know if he's watching. Yeah, you know, I made a big effort to get to the Apple, and I can actually flip over. I got a PC here as well, but I'm streaming here. Yeah, I'm struggling with it. I've almost thrown this thing away like 3 times. All right, enough time wasted. So let's go. I'm trying to find yeah. See, I can't scroll up on the chat even. So I'm gonna mute out for a second, okay? Yeah, let's do this real quick. Let's just go forward. So this is the 10-year treasuries. The path that the algos are painting out here is all the way down to 350, 343. We've got Fibonacci targets. Check it out right now. We have Fibonacci targets right now to yeah, there's some new fib targets here on the monthly. This is really interesting, suggesting 350, 306, that's 3.06, and 2.75. That's all the way down to the 200-day moving average. That's a huge trade. But the algos are at least suggesting potential for 352, and we look at the monthly. Now this is for August, right? So we've already hit STX here, which is 376, 384 to 379 is where that brings us, and that would bring us down to the 40-month moving average. So let's take a look at the weekly, and the weekly, you can see same projection. This is an unbelievable move, actually. And typically when you get a spike move like this, there's usually a retracement. And I've been talking about this for years. I have this thing I call especially on a news story, the spike trade where you get the reversal. We're fairly close to getting maybe the end of August. This is a weekly chart that we could start the rebound back toward the moving averages. But this is definitely a very, very big move. And this goes to what I was talking about with the traders. I mean, everybody piled in on this trade. Everybody piled in on that Russell trade, and they just got punished. They gave all the money back, and if they came in late, they just got creamed in the last 2 days. Because yesterday they got creamed for 3.5%. Mentality, it'll bounce back the next day. Well, it goes down another 3, and that's where you get in trouble in trading for sure. I'm just looking at some of the comments. I can see them again. Yeah, it's going to be interesting, folks. Just looking at a couple comments here, is looking at. Let me go to. Let's go to a chart that I had in. Let's take a look at the algos here on. I can't move out of the way, folks. I apologize. Let me just make this a little smaller. I'll leave it up here. So up at the top here, we're looking at the forecast was showing that the move it up here. The forecast was showing that employment, if you go back and go, I think probably back into February, March, the algos were suggesting that we were initially going to go to 4%. I've been talking about 4.2%. Now we basically printed 4.3, and now we're looking at that starting to potentially stabilize. But look at the moving averages here. You got the 10 period at a pretty good angle of attack. So you definitely have some further increases coming, at least staying above 4.3. I mentioned, I think, in yesterday's, or maybe in the video that I released on YouTube the other day, is that I was, expecting to see this thing get up to, 4.3, 4.4. And I talked about that as well. But in last night's, but this should start to flatten out. We'll see if it does. I don't think it gets out of control. I know what I was going to say is that the 4.5 is actually a big deal. So we jumped from 4.1 to 4.3, and we're likely to continue to see this. We'll have to watch the claims. Claims have been pretty boring. They've been around 2.25, 2.10, kind of maybe 2.30. So maybe we're starting to see some increase there. If we're going to get into a recession, just talking about claims, is what we really are looking at. We'd have to be in excess of about 300,000, maybe as high as 350 to get into a serious. That would be reflecting the serious deterioration. And I've been no rate drops until November. I've been kicking that in. If we see follow through, which I actually think will bounce back here on the markets, not a lot. We should, like I said, make a lower low next week and then get back into the range again. Folks will be looking for bargains. Some of these stocks have been hit pretty good. So, yeah, and I did see that Intel's laying off 15K, so that's a positive, right? So they're adjusting their expenses. Yeah, I saw somebody say something. I mentioned in Substack. I thought it was an interesting comment. It was off my Twitter account, X. And they said, maybe after Trump's last weekend's comments on Bitcoin, that the Biden administration is selling Bitcoin. That's why we've seen some of that happen. Let's go. So I just kind of wanted to show you. Speaking of Bitcoin, this is weekly, daily. So we're taking out some pretty big numbers here on Bitcoin. And, it goes from people talking about it being a risk on, not risk on, risk off, but an alternative asset to the markets. It becomes correlated mostly of the time, and only a very small amount of the time is it non-correlated or some kind of hedge. So it looks like, just like with the stock market, looks like if we take out the 200, this is a 200-day, if we take that out, then the targets, the fib targets are suggesting for Bitcoin 54.46. These are numbers that have been around. We came into that range before, so retesting the 53.5 is starting to look like it. So the 40-week moving average is also coming in there, which is 55.750 on that. Okay, I'm going to show you how to set up the red dots, okay? Let's do that right now. So all the red dots are, you take any of the, so those are for the indicator holders, any of the WTR forecast, you can open any, and I give you the ability to change the period of the SMA, or the simple moving average that it's tracking. Is what we've got here is you set that to 1. So what it's doing is it's projecting a 1-day pattern. So a close is basically projecting where the close is going to be. That's where I get those. We're probably good for 2 or 3 sessions. It's fun to put them out and look like, oh, look where the market's likely to go. Sometimes it's very accurate, but it's going to dynamically update as things change from that standpoint. So what you'll see is as markets change, they'll go. But everything that I've looked at, like here's Bitcoin, it's showing a little bit of a bounce. So here's the settings I use. Period of SMA is 1. So you open up the inputs. I changed it to red. I made the thickness up to 6, so they're nice square blocks, easy to see. Right now, the coefficient's on 50. I'm actually going to change that out. I'm going to put 150 up here. Typically, the setting is 150. If you don't have a lot of data you're looking at, then you can go down to 50. Below 50, the accuracy just goes to hell. It's just not going to work out. And then future bars, I've got 6 up here right now. Leave the past bars in increments of 3, and that's all you have to do, and you'll immediately see that set up. So, since let's kind of jump around a little bit, and then I'm going to try to figure out how to end this. Thank you for happy birthday. Let's go to NVIDIA. This is weekly. Also, on that 21 period moving average, the 21 period moving average is at 0.90 positive. So probabilities of the market bouncing. I wish I had a drawing tool for you folks. I can't even get my screen to work, right? So yeah, this is very interesting. Okay, so we're seeing NVIDIA's kind of being forecasted to come in below this. I've been talking about this. This is a pattern that I've recognized for years. Is I don't use trend lines, so you could draw trend lines off of here, but what I use is the moving averages, and especially with the PPMs are telling us what, like right now, we're down 0.66, so that's major rejection zone. That value of the 10-period moving average, 120, 120.58, and then the 21-period moving average, which still has a strong upward slope. So what you have, I'll see if I can get you in. You have this down slope on the 10, up slope on the 21. So it would be more. So you get into that wedge. The downward pressure on the 10 will be the upward resistance zone. The upward pressure on the 21 will be the zone. So that little triangle is where we'll trade into. And then what will happen as we go down and the PPMs will start to get a turnaround, maybe get a V bottom or something on there. And that's when you start to see the ability for it to break through the 10-period moving average. So it has accelerating pressure right now, so it means that any value that you see, doesn't matter what the stock is or the index, any value that you see coming up to that has a high level or a high level of rejection, or otherwise a high level that it will not go through there. So above the levels that we're at, above this level, will actually give you down right now on the 10 is about a 10% probability that you can close above that even penetrate that value, which is the 120 level that I just mentioned. And on the downside, there's a little higher probability that it can be penetrated, but it's now maybe a 40% probability that it will be penetrated. So that is it. Yeah. So yeah, let's do a couple more things, and then I'm gonna have to figure out how I stop this stream. All right, let's go ahead. Somebody said something about Amazon since we're on stocks. Yeah, so this is interesting. We get an outside reversal bar. Now this is here's a TA lesson for you folks. The last week's high was, let's see if I can get this together. Last week's high was 189.30. This week's high was 190.60, and then we took out the bottom. You can see this, last week's low substantially. That would be technically an outside reversal down, but, okay, this is the but, is normally these do not follow through. The likelihood of an inside bar next week is probably 70+%, meaning that we do not make a lower low next week, and we certainly don't make a higher high, but we come back into probably above that 40-period moving average right now, 170. And then from there, we probably just consolidate along that 40-period moving average. I think that same little wedge formation I was telling you, get downward shape. You look for, when you're using these PPMs and you put the WTARs and you've got the forecast, you can see the forecast is coming into basically a rope sideways. So it's telling you probably the future value of this market based on, let me just double check here. All right, somehow all these got stuck on, I think let me readjust these real quick. Okay, so what I'm doing is I'm going through all the forecast, and it looks like they got turned to 50. I was probably working with this short range. Bear with me one second. Yeah, these all got turned to 50. So 150 is the best coefficient. It'll change things a little bit. All right, so I just want to look at this as well. Okay, everything on the PPMs are good. I must have just jacked around with the moving averages. So, but everything's starting to focus in. Everything's starting to focus in on around 176. So we're coming into that compression, and the algos are suggesting downward pressure on that the moving averages are moving down. So the 10 period will be a rejection point, and the 40 should still be a positive or plus 0.59. So the market's going to want to rebound back out above that level as we go into next week. Thanks for a happy birthday, folks. Yeah, let's see. I'm just looking at some of the comments here. Yeah, so this is what I've noticed. When you get an outside bar that closes in the lower end of the range, but that bar is at a low. This is a low of the last 4 bars. That typically that is not a signal of a continuation of the pattern. It mostly is a mostly we'll call it a capitulation point more so than it is that you could. I told people before, do not. I mean, do not read Edwards and McGee ever. If you see the book, burn it. Okay, just burn it. Pretty much everything that's in there is wrong. And it was only written 100 years ago or something. So that's okay. Well, but it's still out there. It's still being promoted. I know this, maybe I'll have some people watching, but if you see people with a CMA designation, that's always nice. My ex-wife, old ex-wife from long ago, just said happy birthday, so that's always nice. But these are really capitulation points that you see when you see that type of action. And so we got 4 bars down, doesn't really fall, and this is kind of a extended. There could be a spike low, but a reversal. I think we come back in this range. But from what the reason why I tell you that Edwards and McGee is not a book to read, because I tried to make that stuff work in like 1980. I'm a brand new guy trying to figure out charts. We used to have to hand draw all of our charts to update them, by the way, so the best way to learn TA is, at least in my opinion, how I did it was really trial and error. You got to figure out what works, and you got to make a lot of mistakes, and you got to try things, and then you have to. I tell people all the time when my old trading room I used to have, and when we were getting into talking about how to trade and how to learn how to trade, you need to journal. You need to write down every day your trades, good, bad, or ugly. You need to understand, and you need to dissect. Okay, what happened here? What did I always have everybody write up before they get in the trade. Day trading is a little harder, but on swing trading, write up what you're seeing. Here's my entry point. Here's where I think the stop loss is. And probably the best thing to do is to try to enter where you think your stop loss could go, and then put a stop loss below that. So that's probably a better entry point. I don't use stops at all. Never have. I'm also market in, market out when I enter. Very seldom do I do any limit trades. So I'm sitting there watching the market, looking for entry points and exits, and it's a market in, market out, and make sure you trade liquid markets, all that kind of stuff. But yeah, stop losses are just a way to lose money. But anyway, I digress. But that's where Amazon should go. Yeah, let's do Tesla, because Tesla got back to its 10-week moving average here. You can see the forecast is for a bounce back to the 200-week. Tesla is actually, let's zoom out here a little bit. Tesla's another dog with fleas. This is interesting. I'm glad I brought this up. I think Elon Musk is a really smart guy, but I also think he's a hypester. I think I tell everybody, if you own a Tesla, be careful with FSD whatever number. I saw a number of cases where there's been manslaughter cases that people are using that stuff, and they've ran stoplights, killed people, and their lives are changed. So, it's great to believe in the robo-taxi, and maybe it will happen. But it's very dangerous right now to trust some of these systems. And if something goes I've seen a couple of videos, a guy that tests every new version and he's run stoplights. There's always some issue. So, keep your hands on the wheel, go from there. I've got assisted driving on my car, love it. Okay. But it really, when I drive our other vehicle, one of our other vehicles, I'm dangerous because I'm always used to depending on the assisted driving, and then when I have to actually drive, it takes me a while. It takes a focus, so you lose a lot of your focus when you start to you're flinging a multi-ton piece of steel down the road around other people. But let's take a look at Tesla has some new upward target here, which is interesting. 336, 411, and 458. That would be a new high. So that's a pretty crazy number. So maybe they'll come up with that. And but let's go back to weekly and take a look at So basically, we spent on the 200-week average. We spent about 1 week really above the 200-week, and now we're back. It's also back into the range. If you look at it, it's just trading back at the high-end range where we were before. We're down to, just looking at numbers, 207. There's support at the 40 at 202. And then the extreme support right now is 183. We easily could go back. A lot of these markets are doing full round turns, like the Russell, like Tesla, NVIDIA. I mean, if you look at from the split, went to 100 to 140 and basically trying to get back to 100, right? So we went through that a little earlier. But yeah, here we are at 107. So if we look at the split number, it was right around here. I think this bar where my cursor is right now is where the split occurred. So we went up and now we're back. We're coming into these moving averages. Here's that wedge again. Downward 10 being forecast, upward 21. We should hang in this zone here. So these numbers are declining every week, and these are just simple moving averages. They're not weighted in any way or exponential or any of that stuff. I found that simple is just for the techniques that I use are good. Some of you may use, some exponential or weighted moving averages. That's fine. You just have to have. What I tell everybody, whatever the tools that you use, you just have to have the context and understand them. I haven't used anything but what you see on this screen. I'm a long-term TradeStation user as well. And, I've used that stuff. As a matter of fact, we developed all the indicators, the core, the models, and everything back in let me make sure I get this right. Yeah, 1990 was when that happened. So that was a long time ago. These indicators have been part of my life for a long time. I get people tell me, I bought them, all I've done is lose money. And it's kind of a harsh joke, but you can't take a bad trader and make him a good one, no matter what kind of tools you give them. Or let's say you're a bad carpenter. I can't make you a good carpenter because I gave you a shiny hammer. You have to spend the time to realize what what things are working and journal and do all the stuff. Nothing's going to come easy. If old buddy of mine from the trading floor used to always go, "It's never easy." That was his favorite line. His second best favorite line was "Do not pay attention to the man behind the curtain," which was the reference to the Wizard of Oz when the Oz was moving all the levers, and he would always say that when the arbitrageurs would come in and jack around with some of the stocks that we were trading. He goes, this is not real. This is going to change. So that's the case. All right. Yeah, I'm pretty sure you guys are still online. I'm looking at some of the metrics on. I use Streamlabs OBS to do this, and usually the mic is fluctuating in real time. This thing is not doing that, and I know. Yeah. So let's see. Last couple questions. Great hanging out with everybody. I wish software. There's a lot to figure out yet. It might be some of the settings in Streamlabs. It's very, very delicate and wonky when you're working with this. Okay, birthday calls. Sorry. Yeah, 24-hour stream. Yeah, I'll just. Too bad it's not a normal day. I could just come back to my desk. Anyway, folks, I really appreciate it. I can't even see how many folks are on the stream right now. So I'm pretty much. It says 132 watching. So that's probably, I'm on my phone here. But yeah, I think in summary, this was a pretty interesting week. There's one last thing I'll talk about. Probably just a few of you that are live here will hear this. Probably nobody will make it to the end of this video. But I mentioned in the Substack last night, it's interesting that on Tuesday night, pre-market, overnight, we saw this huge rally. I thought, why is the S&P up 0.75, Nasdaq's up 1.2% at 2 hours after the opening of the overnight session? I thought that's very interesting. Kind of looked around. Was there anything going on? No, nothing's going on. Thought maybe they would fade it a little bit coming into the open of the U.S. on Wednesday morning prior to the Fed coming out. No, didn't do that. They kind of stayed stable. Powell showed up. They did the statement. Powell did his conference call. There's still a bid in the markets, right? And it was very interesting. And we saw some things going on in the treasuries as well during that same time. So now we spent forward to last night. So I'm getting ready to write the Substack. It's pretty late, probably about 11 p.m. Pacific time. And so I start working, and all of a sudden I look, markets are down big, and they're really pushing them pretty hard. And I'm like, this is interesting. And I guess I'm going to present a conspiracy theory, is that I think there's some leaks or something going on. There seems to be some reasonably big players come in. So think about this. If I was able to bid the market overnight, and last night we saw the selling come in, right? Heavy selling. And the result of that would be when the markets start to open and now you got the news out and everybody's selling. And if you're the overnight seller, you're just taking them in. You're buy. You're just taking them in. You're booking the profit. So it almost seems to me that there is, insider trading. This is beyond this. It is, somebody's got the report, and they're trading off of it, and they got a lot of money. That's how this stuff works, right? And so I just keep your eye out. On the YouTube channel, I do plan on putting some videos out next week. It's still I'm still compromised a little bit, trying to figure out if I can get this live stream thing working, then maybe I'll do a couple of live streams, but we'll see how successfully I get through how I end this meeting. But folks, I mean, everything that we're seeing in this world right now is amazing from the standpoint of the transparency of everything, right? all of a sudden things look way more obvious of what's going on than they have in the past. In the past, I've been around the markets a long time. You kind of went along government reports and all the different elements that come out. There's the, you kind of believed everything. Now you're like, wait, I don't know, what's going on? Was this a narrative that who's this gonna help and all that kind of stuff? So anyway, folks, probably an interesting note to end on. But yeah, I'm just I'm hoping to, like I said, I would definitely do a couple things, and I'll do some videos next week. I really I know it sounds, I feel like I've offered you folks a tool, kindlereport.com/wavetech, to get into. I think it's $3.20 a day to have Wavetech. It's $100 a month. But what that thing can do for you, for protecting you when stocks are starting to get hammered, both on the daily models as well as on the intermediate. I'm going to have to show you folks what this is going to do. This is probably one of the most important times to have our software. It's one thing when markets are turning around, you're buying, everything's going up, but the protection of capital, I have made, what year is this? So we're 2024, since around, we launched this software program in 1998, right? So it's getting to be 30 years ago. And all I can tell you is that sell discipline, the protection of your capital, is the most important thing that you always have. And I always tell folks, if you have a sell discipline, you also have to have a buy discipline. So if you get out, then you end up staying. You end up staying in. My standard line that I always have is you always want to process over attitude and opinion. So attitudes and opinions keep you in the markets when you should be out, and they keep you in. They keep you out when you should be in. And that's why you have to have a real solid process, both sides, buy and sell. And so with that, I think is a pretty good note to end. So I'm gonna, you'll probably, if you stay on, I'm gonna figure out how to get off of this thing. I think I can turn my camera off. That will help. So anyway, folks, thanks for hanging out. Really appreciate it, and absolutely would love to hang out more, but we're going to call it quits. I'm going to go enjoy the rest of the day, enjoy my birthday. I got a couple calls that came in I need to return, all that kind of stuff. Anyway, folks, take care, and we'll see you the next time we see you. Okay, bye now.